Now, this is important. This is something you might see in a bunch of questions. So the effect of over and understating inventory. Now, if you have an error in ending inventory, and these will be, through LIFO, FIFO, weighted average, all that, if inventory is understated, well, what's going to happen? Income items, well, cost of goods sold is going to be overstated, right? Because what's our journal entry? It's a debit to cost of goods sold, credit to inventory. So cost of goods sold is going to be overstated, and net income is going to be understated. Well, that makes sense, right? Because if your expenses are overstated, that means your net income is understated. And what's our effect on the balance sheet items? Well, inventory is going to be understated. Ending inventory is understated. Yes, this is ending inventory, right? So cost of goods sold is overstated because your ending inventory is understated, right? And these are what is remaining. Your ending inventory is what remains at the end. Retained earnings, well, that would be the same effect as net income because net income flows into retained earnings. And if net income is understated, retained earnings is understated. All these relationships are super important to follow with and make sense to you. Memorize it, I would say, and think about it, right? But if you have it memorized, you really can always depend on that. But definitely something to understand, very important here. And just as a preface as well, I'm going to say that in this chapter, what's our goal? Our goal is to prepare for a sim, because whether it's a sim or a bunch of multiple choice questions, either way, it's the same. You're going to be dealing with, if you can answer LIFO, FIFO, weighted average, perpetual and periodic, and find ending inventory and cost of goods sold and answer some of these questions, that's your goal for this section, and you'll be good to go. Those are the trickiest and most prevalent points from this section.